So break it all down for us in terms of investing today? I mean, because you got two issues here. It sounds like you're not so worried about higher rates because they're going to top out at 3.5% or 3%.
Is fine.
Is fine. But then there's also China. So the tariffs are also an issue. Defense Secretary James Mattis is meeting with his Chinese counterpart today after earlier talks were canceled. The president weighed in on this escalating tension with Beijing during an interview yesterday with Stuart Varney. Here's what he said.
They want to make a deal, and I said, you guys aren't ready yet. You're just not ready because, look, they've been taking $500 billion a year out of our country. It's time that we stopped, okay? We rebuilt China.
So this coming as the Treasury Department declined to label China a currency manipulator, but faulted the country's lack of currency transparency in the recent weakness in the currency report. So, Phil, how worried are you about the tariffs, about the fight with China? And would you put your money to work right here in the stock market?
Well, we actually went to an overweight. We had taken some money off the table at the end of the second quarter because we thought that there would be a potential third quarter air pocket. That happened. We got an oversold reading last Thursday night, and we put money to work there. What is going on in China, in our view, is the next step in a policy transition to try to address a $600 billion balance of trade deficit that's taking 3 percentage points away from GDP growth. China is the biggest issue. $375 billion surplus against the United States, and they're stealing our intellectual property. Right. Now, you look at what the Trump administration has done, isolating China. They've got a handshake deal with Europe. We've resolved Mexico. We've resolved Canada. Japan wants to reach a deal with us. I think we're tightening the screws on China. And I think what we're going to eventually see is have them reduce our deficit with us down to about the $200 billion neighborhood by allowing them or getting them to buy more stuff from us, soybeans, et cetera, and reaching some agreement on the theft of intellectual property.
That would be a huge move.
And ultimately, what that does, if we can get our $600 billion deficit down to $400 billion, we're talking about sustainably growing the economy 1 percentage point faster.
And opening markets. I mean, that's another issue that the president would like to see changed, an opening of markets, because they've got total access in the U.S. that the U.S. doesn't have access to, the 1.4 billion people in China.
So it's a question, in our view, of when that deal gets structured rather than will it get structured.
Really? Because Jack Ma has taken an entirely different approach. I mean, he sees this as a 20-year battle between the U.S. and China, one economy trying to supplant another. So I think there's a lot of people that think that the president doesn't actually want a deal, that he wants to focus on China the next 2 years.
From our perspective, I think you've raised an excellent point. The Chinese and the Americans, these are the two greatest economies in the world. And there is a mutual need here. We need them to buy our paper. They need us as an end market to buy their stuff. And we can't be in a situation where that situation is just drifting for years, for decades. Our view is that this situation is resolved sooner rather than 20 years from now.
All right, we'll be watching. Phil, great to see you.
Thank you very much.
Thanks so much. Phil Orlando from Federated.